So a lot of brokers won't even bother. They're just going to go to the group and say, look, sorry, your rates went up 48%. Here's what we can do about it. We can increase your deductibles, increase your copays, narrow the network down, and maybe next year we can go back to kind of a richer plan like what you've been on. Or we can cost shift to the employees and have them pay a larger share out of their paycheck for their health premium and have them help offset those cost increases. None of those solutions are good solutions, really.
Benefits on the fly.
So we're on our way to Seattle to meet with a client, and we had a group that had a rate increase that came from their incumbent insurance company, and the rate increase was pretty staggering. It was a 48% rate increase. What that actually meant for the employees is that's $300 per employee that their health insurance premiums were going to be increased by. And when we talked to the incumbent insurance carrier, it was a fully insured carrier. We asked the reason for the rate increase, and they didn't give us a really great answer. So this is one of the things that I love about my team is they went right to work and they rolled up their sleeves and started digging into the actual claims data for this group, all the reasons the carrier said they needed to justify that type of rate increase. And in the end of the process, the our account manager was able to find an option that was actually better benefits for this group. And the most amazing part is the premium costs were 8% below their current rates. So not only did they avoid a 48% rate increase, they actually got an 8% decrease. And I just have to think that there's so many businesses out there that have brokers that will just let them know that, hey, your insurance is going up this amount and it's because you probably had high claims and there's not much you can do about it. So all we can do is really cost shift to the employees by way of increasing their deductible or their copays or going with a narrower network and all the usual suspects that don't do any good for the employees. They certainly don't address the root cause. So I appreciate my team's approach to really diving into what is the root cause for the rate increase and is it justified? And then doing an exhaustive market analysis to see how do those other plans compare and is there a better opportunity or a better solution for this particular group? And obviously there was. So not only did the employees' premiums not increase by $300 each, but and of course it was more for family rates, not only in premium, but they had a decrease in benefits or a decrease in their out-of-pocket expenses of their benefits. So a lot of brokers won't even bother. They're just going to go to the group and say, look, sorry, your rates went up 48%. Here's what we can do about it. We can increase your deductibles, increase your copays, narrow the network down, and maybe next year we can go back to kind of a richer plan like what you've been on. Or we can cost shift to the employees and have them pay a larger share out of their paycheck for their health premium and have them help offset those cost increases. None of those solutions are good solutions, really. I think in this case, it just proves that the best solution is to question everything. Question why are the rates going up that much? What's the real reason behind it? And is it justified? One of the problems with fully insured plans is they're not always transparent about what the claims data is. So they can tell you that the claims were bad and that's why they gave you a rate increase, but if they're not willing to share with you what the actual claims were, then how do you really know how bad they were? Not only that, how do you know whether or not those claims are manageable or if it's for an acute medical condition that it's not going to affect the next year's claims because it's done and over with? I think a lot of times that happens with these incumbent insurance companies, especially in the fully insured market, is they justify their rate increase by saying, well, last year you had lots of claims. So they're essentially just trying to make up for those losses. But that doesn't necessarily mean that they're going to have the same amount of claims for the next year. Through our data analytics on claims data and our healthcare report card that we do, we're able to uncover what the real claims are, what the claims experience for that group was, and we can then look at finding a carrier that will recognize that and acknowledge that and not try to justify a massive rate increase for the group.